starting. All attendees are in listen-only mode.
Good afternoon, everybody. Welcome to Monday and Happy New Year to you all. I hope you had a wonderful time with you and yours. And thank you very much for being here today on this session that will, for now, continue to run on Mondays and Thursdays. Delighted to see you all here. Thank you very much. I know I always say, but it is very, very meant. If you could just let me know how you're going in the questions box, it's always good to hear from you. And I will just put this important message just to remind you that this is for educational purposes only. As we are looking at live markets, please do your own due diligence on anything you see or hear. Make sure that you follow trading plans and, of course, manage risk on every trading action. That's entry and exit consistent with your own trading objectives and financial situation. Thank you, you guys who have said hello already. Brian, thank you very much. You're so very welcome. It was a pleasure to give them. And happy and prosperous New Year to you as well, mate. I hope it's a wonderful 2026. G'day to Hugh. Hope you're good too, mate. And hi, Mark. Always great to see you here, mate. Right. Let's get things kicked off. Lots to talk about. Lots going on right now. Markets are an interesting place. We'll have a closer look at this once we have a look at the charts, but just as we meander along the headlines, obviously we had a choppy, same to you, Brett, a choppy holiday period ending with a pullback, subsequent to testing record highs. So Santa Claus looked as though he fell off his sleigh towards the back end of it, but we sit where we sit. We're around about 1% off the all-time highs on the S&P 500. Of course, the major event over the last few days has been the US Venezuela intervention incursion, whatever it's called. Essentially, for those of you less familiar, the US went into Venezuela, as they've been threatening to do, with the pile of military arsenal around the Caribbean. They removed the existing president. And then Trump has since done a couple of press conferences and a heap of social posts suggesting that US are going to essentially run Venezuela for the near future. There is an interim president who was the previous vice president sort of there on the ground, but it's very, very difficult at this stage to pick apart any details. Obviously, oil has been a central theme, and certainly Trump has referenced that in some of the things that he's said. So regime change, oil move, bit of both, dressed up as and something to do with drugs, is where it's at the moment. Obviously, some dust will settle over the next few days. We might get a little more clarity, or we might not. At the moment, the markets aren't responding significantly to this, to be fair, but we shall see. On top of that, it's a big data week ahead, and on top of that, we've got US earnings starting next week, so just keeping an eye on that. US futures are mixed in early trading. Nasdaq was outperforming last time. We'll have a check out in a moment. Asian markets were generally positive to start the day. ASX was just trading a little below neutral. We'll check out where that is in a second. The European futures are indicating a cautious start to the week and the year, really. But we did get some light trading on Friday, obviously. The US dollar index remains range-bound. It is strong today, interestingly. That seems to be the major market that's moved on the back of news. Gold has bounced, so gold and US dollar moving together. Potential flight to safety. Let's see how that unwinds over the course of the next few days. Again, we saw record highs, and then we had an end-of-year sell-off. We had a pullback in everything over last week, essentially. Likewise with copper, hit record highs, then pulled back a little bit at the back end of last week. And oil is range bound. Very little movement in the oil markets at this stage, which is sort of interesting. But maybe things ramp up when the US market opens tonight and we get the COMEX coming on track. Right, on to cryptos. Bitcoin's seen some buying, which has pushed price to the top of the range. We'll check out a chart in a moment. And as I said, a fairly busy week today. Um, sorry, a fairly busy week this week. We've got PMI data today coming across the wires. We've got US jobs week, so we've got the gold stage, the ADP, the weekly jobs, and the non-farm payrolls is expected at the end of the week. Interestingly, there's quite a lot of chat around the JOLTS job number. Obviously, it tends to be a little bit forward-looking, more forward-looking perhaps than the non-farm payrolls, but I'm remain unconvinced that the markets will respond significantly to that. We'll sort of see. On top of that, we've got we've got Australian CPI, and then we've got US consumer sentiment. A lot's going on. Let's have a look at some of these stories in a little more detail. If we just quickly flick to let's start by having a look at how things closed on Friday's softer session. We saw a little bit of rotation out of tech, not significant at this stage, but it's really worth watching over the next few days as a potential. You can see the Dow and the S&P 500 outperformed, or small caps really. So it was a positive day on Friday. The Russell 2000 had the best of the lot. But if we look at the futures, you can see the Nasdaq's recovered most of that. Generally speaking, a little to the upside. You can see the European futures have actually picked up significantly over the last hour. Really, they were fairly flat and ordinary if we looked at the DAX futures, but you can see there's a bit of buying coming into that early doors. We've got buying into oil, we've got buying into gold. Wouldn't be surprised to see gold retest record highs if there's some momentum comes behind. And copper is shooting up this morning. May test record highs already. Again, that's moving significantly over the last hour or so, trading near the highs of the session. If we have a look at data, you can see there, let's go back to where we should be. Here's today, and you can sort of see there the ISM manufacturing PMI number coming out of the US tonight, which might be interesting. We've got some numbers coming out of Japan very soon, and China in about 5 minutes' time. So come back and check in on that. That's pretty significant. Tomorrow's we've got some services PMI. The German preliminary CPI number will be interesting. The markets are predicting a move back into positive territory, which would be a good thing. Wednesday brings the Aussie CPI a slight tick to the downside, as expecting in the year-on-year figure. We may look, it's pretty well locked in that the RBI aren't going to do anything this month, but maybe a soft CPI number will make them more cheerful. Here's the Wednesday also. Once we move to the US session, we get the ADP number and the JOLTS job openings, which aren't expected to move very much, to be honest. The ADP non-farm employment change was negative at the last read. So it'd be interesting to see if we're a flip over in that. Then we've got the weekly employment numbers coming out of the US on Thursday, and then we've got on Friday, we've got the headlines, obviously. Non-farm payrolls. We've also got Chinese CPI coming out as well, which is of interest. Throw in some consumer sentiment expectations, makes for a busy week. If we look at how Asia is responding at this stage, significantly more positive than it was last time. And the Nikkei is on a charge, with the Hang Seng and Shanghai now online as well. They've both started positively. Shanghai doing well. ASX has moved just above neutral. Let's just have a look at a sector split. I guess his resources are doing well. Yeah, energy and materials both looking good. At this stage, those two sectors leading the market. Everything else is looking a bit shy. But you can see there really hasn't been a great deal of move since open. It's flirted with neutral really since the opening bell. Right, let's have a look at some charts. Let's start with the US 500. I'll just show you some things as we go. As a side issue, the US 500 day, you can just see that pullback at the end of last week. Slightly to the upside today if we look at a very choppy day on Friday. But typical end of year volatility on Thursday and Friday, to be fair. Sorry, on Wednesday and Friday. Also a short on Thursday. So we're seeing some buying today. Might take us up back around this 68.83 level, but not jumping up and down about the Nasdaq. A quick look at the FX pairs. Are showing that general US strength. You can see a strength there against the euro, against the yen, against less so against the Swissy. Bit of a mixed picture. It's okay. Bit of a mixed picture. Sorry, might decide to fly across the room. Bit of a mixed picture with the Aussie this morning. We'll check out those in a bit more detail in a moment. As for the Nasdaq, there's our new probability forecast tool of what the next few bars may show. You can see there is a tilt upwards, potentially bounce up this 25,150 level. So I would suggest we're probably going to be caught in a little bit of a range. Now we're keeping on 25,520. So 70 points from where we are now is the next pause point. If we reach that, then 25,840 could be on the cards. Certainly the picture is one of a bounce. If we look at the US dollar daily, you can see there we've had a bounce today and also on Friday. If we look at the chart, you can just sort of see that buying. It's not major, and it's still really within this range. 98.45, the level to look at the top. As I've said before, I tend to use the US dollar index as reference rather than a trading vehicle. But that's a personal preference in trading US pairs rather than the index as a whole. So with the US dollar index moving up slightly, you can see their gold's doing likewise. That was my note for today. You can see the pull down from record highs that we got there on the 29th. Since then, we sort of found a bottom here. I'm going to actually put a support line there. So there's a few key points on this. If you check it on the hourly chart, you'll see there. Very, very choppy. Wouldn't be surprising to see it back up at 44.50. You can see that was support back here. If we just pull this back a little bit further, you can see this is an established support level, so may well become resistance. In the short term on the hourly chart, we are looking to breach. We are back over that 4,400 level, which is psychologically important. We can see with this candle here, we haven't held that, which is sort of interesting as well. So a close above 4,400 may see us add those extra $50 to test this resistance to the upside. That looks likely, but only if we do get a hold on a breach upwards from some buying pressure evident from 4,400. Be interesting to just stick the probability filter on again. See the momentum's changing to the upside as the moving averages, short-term moving averages have crossed. Volume's higher as well. Let's try this. So it's really in the balance. That's very, very typical of what we're seeing here now. If you look, it's looking at this fact that we are not through a key level. You can't get a more split opinion than that. It's a really good indication of what markets are actually doing when they're at a level like this. It's not parting through, so that's a really useful sort of measure there that you can see going on. Let's just quickly. Welcome to all of you on YouTube, by the way. Thank you very much for popping in. It's always great. If you are watching this live or watching this on replay, then if you wouldn't mind clicking a thumbs up button, that would be great if you're liking what I'm doing here. Right, okay, so that's gold covered. Let's have a look at copper. And as I said this morning, copper is rocking. You can see the test of record highs last week before we had this pullback again on the 29th, which saw pullback in many assets. This is on the back of a substantial uptrend which has been in place since mid-October, really. And so that test now of record highs is really interesting. Are we going to touch $6? Is the question markets are asking at this stage. That's a significant move. What's difficult with this, you can see this last hour. We're really interested to know what's shifting that to that degree, why copper particularly. I've been watching 590 for potential move up to 6. It was the high that we hit back here on the 29th before we had that profit taking pullback or whatever it was across the board. But at this stage, it looks ripe for rocking. And whichever time frame you're looking at, it is an interesting move and looks as though it's continuing for now. Now, as for oil, so we are, bottom line is we are in this sort of range, mid-range between sort of $60 and around about 55. So sticking mid-range for right now. Long wicks, small bodies, markets not really sure what to do themselves after what happened in Central America. You can see that initial market response, which got oil to the downside, but then we sort of recovered almost immediately on the USO futures contract. So it's a wait and see really with oil. 58 looks interesting. If we breach 58, we might crawl up, but probably a more acute level to keep an eye on is this sort of 58.80. It's got a long way to go up to that. There may be a scalping opportunity there of around about 50 cents or so. But at this stage, oil is been pretty mellow. As for Bitcoin, that's been unmellow. You can see that. And again, that's massively moved in the last 30 minutes to an hour. You can see that breach of a short-term range, which has been in place on the that was the weekend's trading for the last. So range bound on Saturday, range bound on Sunday. The 4 hour is more interesting to look at. You can see this was a major resistance here around about 90,000. Now we breached that over the weekend, and you can see that buying coming in now. Pop it on the daily chart. Be interesting to see if 93,700 becomes a key level. Hi, David. Good to see you, mate. Thank you for saying hello. So Bitcoin's flying. So the movers and groovers this morning seem to be Bitcoin and copper as the two that are really moving hard. Gold will be interesting to keep an eye on. Should we reach 400? Those are three major asset classes we're looking at. Let's get on to Forex. This could be a tough day. I'm not sure whether this is a reflection of how markets are processing things. Just gonna have a quick look at Forex Factory. Certainly there's Certainly there's moves in gold, but nothing else, it just seems like. Okay, but the charts are telling us what the charts are telling us, and we're seeing that drop in the USD over the last half an hour, which has essentially given up half of today's gains already. Back to a key level around about 156, 157, sorry, on US yen. Let's put this into context on the daily chart. We are still on the daily chart showing uptrend with higher lows. Obviously, this is looking a bit like an ascending triangle now. 157 looks like a most definite key level with the potential next resistance at around about 75 pips to the upside. Difficult one to call. I would see how this finishes potentially in the next couple of hours. I would want to see you can see that's quite a heavy buy as well. Sorry, quite a heavy volume as well. But just suggest that this is a for the moving price. There's a new indicator I'm looking at. I don't know whether it's really handy or not. There's a little bit of tweaking, but I'll give you the idea of it. So let's clear in. Which looks like an old version, but we'll play it anyway. So there's essentially three zones with this. The mid zone is where we want to be, really. What that says. So this zone here is where we've got light volume compared to the price move. This volume here is where we've got increasing volume or increasing relative volume, and that's consistent with the price move. So it's actually dropped back into there. And then the red zone at the bottom is where we have slow volume for the relevant price move. So this stage moved back into the middle, which is sort of interesting. And you can see there again, we've got this. It actually works on the last candle, so on the closed candle. So it'd be interesting to see how it reads this. But certainly saw that as a big as a move. Wasn't helped by this volume here, but this volume has pushed us back into this range here, which suggests that this volume and that price move are consistent. Interesting to see where it goes, but as I said, I'd be watching for a close above 157 and 157.14. Euro USD is interesting. We're seeing a tip over in this. This is actually on the daily chart looking like a double top at the moment. So that level of 117 is very, very important. Technically, you can see we're actually testing that right now. So we're seeing, maybe we're sort of seeing a bit of yen strength coming in. Let's just check out the GB pound yen. Sorry, the US yen. Very, very choppy. Oh, that's our new risk calculator. The strength of signal. The difference with this is it's a risk calculator, and then it gives us the strength of signal, and then we can recalculate. So, for example, if we wanted to do we need to slow down the end of this just, but let's say we wanted to do a long trade here. Just plus it. So 104, let's say 104.85, and we wanted it. Then we calculate and give us our lot size based on this account. Actually, let's just do a fixed lots. Let's just do 0.5, 0.2. Okay, let's do one full lot. Okay, so there's one full lot. What it says is it's neutral, so it doesn't suggest the strength of signal is neutral. So it doesn't suggest a move on this. Let's just see if it changes on that. Let's go short. The stop loss at 105.09. 105.09. Fixed lots on calculate. Again, it's neutral, but should it be a weak signal, what we might do is then and just do this, and it would recalculate it. So it offers a suggested lot based on the strength of signal, and then you can choose to or not to recalculate that. Pretty cool, eh? Anyway, that's a side issue. If we look here at the Aussie yen, yeah, we're always looking for different things we can potentially use for MT5 just to make decision making a bit easy. That's mid-range. Essentially, if it breaks 105.20 to the upside, I'd probably even put this right down there. I'm not actually that enamored by it. USD yen, you can just sort of see, sorry, GB pound USD, you can just sort of see the GB pound is a bit weak. Like the USD, I'm actually going to make USD, Euro USD my chart of the day, the one to watch, keep on your radar. Should we breach 117, that's technically important. On multiple time frames, you can see on the day it'd be a breach of that, and 4 hour it'd be a breach of that double top. The nice round number, pushing it down a little bit, the nice round number of 117 is probably one where there's lots of ending orders sitting. But you can see it's relevant for the hourly chart. And of course, 30-minute chart, we had this sort of 5-week test, 1, 2, 3, 4, 4-week test of that previous level. But as I said, 117, and we look as though we're sort of moving down there now. On reasonable volume as well. So it does look as though the sellers are in. So one to keep on your radar. Right, okay, so let's look at the ASX. Already have the index as a whole. Let's just have a quick look at the scanner. Let's have a quick look at a couple we've been tracking already. So we've liked iron ore stocks for a little while. CIA looks really good today. Continuing its move higher, we had this pause within a range of around about 40 cents. We've breached that now, 635. If we put that back, you can see these are levels that we hit since back here in October 2024. The pause point here, you can see there's lots of consolidated price action around that 660 level. That's about 5% of the upside on CIA. Bendigo Bank were another one we looked at. We pointed out this sort of double bottom type of formation a couple of sessions ago. And you can see it did breach it, but it's thought about it and it's going again now. So a very positive move on Bendigo. Not a massive amount of upside in this. I think we might get stuck around here. So only about 30 cents, only about 2.5 to 3% potentially on that. Webjet were another one we have been keeping an eye on. This is a potential reversal with short, a V-shaped reversal. Looking at 473, possible move down to around about 454 for breach that level, and there's some selling pressure comes in. But at this stage, volume's very low. It's not a convincing move. So what I'm going to do is I'm just going to flick to the scanner, make it easy. Find the right chart. There's entry. There we go. So if we look at our scan, let's see if there's anything that's looking very green. IGO looking very green across the board, and you can see there. That's why this scanner is so useful. It's suggesting a continuation. We had this slight pullback, very slight pullback, and then down to 772 in context. This is highs not seen since the beginning of last year. Possible move up to $9, maybe. Might get stuck around this 9.50. So that's around just a little over $1 on this. It's around about. That's a very healthy return. Should it get up there? So that's looking pretty good. It's about 8% if it should make that. All the gold stocks, all the resource stocks do about PLS. Let's have a look at PLS. That's rechallenging. That's rechallenging a key level. It's almost a continuation. Should we pushed out of this range back here? That we've been in since early November. We pushed or tested that during the Christmas period, pulled back a little bit. And now retesting 438 looks very interesting. If we sort of pull back, You can see there. Is the lithium still intact for this year? Well, perhaps it is. 536 looks like a reasonable price target if we find ourselves back in this range. A little bit of work to do, but worth keeping on your radar. Again, of course, you've got a really nice risk management level beneath that if we should breach it. But it hasn't breached yet, so be patient. Paladin in the uranium space has got up today. Let's just have a look also at deep yellow while we're here. .4% as well. Pretty nice move on deep yellow. We talked about this previously. Potentially recharging $2 into today's trading. Technically, that looks important. You can see this previous price action here, which got stuck at around about 208. Similar story today. So we're looking for a breach of 208 to suggest a longer-term trend change. The 200 MA is quite flat because of this price action between mid-October and December. But that looks interesting for sure. And a breach of that would suggest potentially a move up towards this sort of 240, 245 level there. That's I like that as well. Let's see if we can find one more. Let's see if we can find one that's out of the resource space. There's DBL doing well. Lion Town going again. Rio looking great. TWE. No, not enough. There's the two, another resource stock. Sandfire, copper stock. No, it looks like the resources are owning it. Let's have a quick look at NIC. I'm going to move NIC. I'm just going to check that isn't, I mean, that is a spectacular move. May get stuck here. That looks corporate to me rather than let's just see if there's anything being released, but the whole of that sector is a new strategic partner announced on the 2nd, so that was on Friday. Maybe that's a belated market response to that. There's the market response to that on the 2nd. You can only just see that candle there, which was a doji type candle, got follow through on that. That's very positive. This looks as though it's heading up to $1. But yeah, that's backed by some fundamental news as well. So in terms of charts of the day, I think we'll keep an eye on CMA. As you see, we've got that move above there, and then we didn't actually have a look at LYC. That looks as though it's found a bottom and might bounce. I'm liking IGO. I'm liking IGO for a move back up to $10. So I'm going to make that my chart of the day. Also keep an eye on JDO. Somewhat unusual activity here, just as something a little different. Breach of 183 might be technically interesting. So there you go. That's your wrap for today. I'll better talk about the US very briefly, though it's going to be a very difficult one to call. Light of how markets may respond for the first time to what's happening in Central America. It's as though pre-market isn't open. We had a beat up, pull back, pull back, pull back. Lots of movement out of big tech. No. Right, AMD are going to be my chat of the day. They've booked the trend a little bit. Nice move up that we've seen extended hours trading. 223 is the key level. Ports of call on the way up may get slowed down at around about 240, and then of course we're into record high territory, but that's looking good. Worthwhile being patient. Check in with it tomorrow morning. And the other one I wanted to check in on. Just be careful, of course. You need to check in when earnings are coming along. Nah, that's not lighting my candle at all. No, let's just stick with AMD. Tesla have been interesting. And we again had a sort of foray up to this sort of near $500 mark. Did it actually make it? No, it was a dollar shy. But since then, we've seen a pullback again, and we're back into this sort of long-term range. So Tesla's refusing to breach 500 at this stage. So anyway, what I'll do now is I'll say goodbye. I'll say have a great rest of your Monday. I will see some of you later on various webinars around the planet. Very safe. Just be careful this week. Lots of data, lots of geopolitical action. Might be an interesting time. Worthwhile programming that into your risk management thinking. Anyway, take care of yourselves. We'll see you again very soon. Bye for now.